Hello friends, and welcome back to the US Stock GPS channel. It's Monday, October 13th, after the market close. Today, US stocks staged a strong rebound from last Friday's sharp sell-off that was triggered by renewed US-China trade tensions. The rebound was fueled mainly by the president's remarks suggesting a softer tone toward China, which helped ease investors' concerns. Let's take a closer look at what drove the rally, which sectors led the move, and the key stocks behind it. 1. Key catalyst trade tensions ease. On Sunday, the president posted on social media using a noticeably softer tone, saying that everything will be fine between the US and China, and emphasizing that the US wants to help, not hurt, China. This message greatly eased fears of a new tariff escalation, becoming the main catalyst for Monday's market rebound. 2. Sector leaders, materials and tech time. The materials and technology sectors led today's advance. Materials sector rare earth and critical minerals rallied. The materials sector was one of the top performers within the S&P 500, driven by a massive surge in rare earth and critical minerals stocks, such as MP Materials and USA Rare Earth. The core reason behind this surge was geopolitical tension and renewed supply chain concerns. The direct trigger was China's announcement of stricter rare earth export rules, requiring government approval for any product containing more than 0.1% rare earth content. Given China's dominance in global rare earth supply and processing, this instantly sparked fears of shortages. Meanwhile, the US government stepped up efforts to secure non-Chinese supply chains, including the Department of Defense taking an equity stake in MP Materials and large financial institutions like JP Morgan launching multi-billion-dollar funds to support critical minerals development. Let's look at several companies that caught investors' attention today. Critical Metals Corp, Critical Metals, an exploration stage company focused on rare earths and critical minerals like lithium. Market cap in the hundreds of millions, minimal revenue, still unprofitable. Growth potential lies in resource expansion, drill results, offtake deals, and financing access. Reports suggest the US government may take an equity stake in CRML, triggering today's plus 55% surge, with another plus 24% after hours. High-risk, speculative asset not suitable for long-term holding. Swing traders should keep positions very small and add gradually if momentum continues. American Resources Corp, AREC, building a vertically integrated critical materials platform from mining and refining to recycling. Operations include metallurgical coal, rare earth separation, and metal recovery. Market cap is approximately equal to $230 M. Annual revenue minimal to $0.3 M. Still loss-making, negative $37 M. Recently raised $33.7 M private placement plus $33 M pipe financing to accelerate development of the largest US rare earth mine from coal waste resources. Short-term only, small position trading stock not for long-term investment. Neocorp, NB. Developing the Elk Creek project in Nebraska, rich in niobium, scandium, and titanium. Market cap is approximately equal to $520 M pre-revenue stage. Recent pilot plant results showed promising rare earth recovery rates, but the company remains loss-making and capital-intensive. Early-stage project risk, short-term speculative trading only, with small position sizing. USA Rare Earth, USR. Building a fully integrated mine-to-magnet supply chain in the US. Now public via SPAC merger, still unprofitable. Growth depends on successful commercialization and customer contracts. Its acquisition of the UK's LCM, Less Common Metals, was a strategic step to strengthen magnet manufacturing capabilities. Same as others, speculative, suitable only for small position, short-term trades. MP Materials. The US leader in rare earth production, owning the Mountain Pass mine in California, the only large-scale rare earth mine in North America. Fully integrated, mining to niobium and praseodymium oxide separation to metal and magnet production. Currently expanding its Texas magnet factory network, including the 10 times facility, backed by the US Department of Defense's $400 M convertible note investment. Market cap to $14 B to $17 B. Production of niobium and praseodymium oxide plus 119% YoY. Record output of 13,145 tons of concentrate. Still in a heavy capital expenditure phase, near break-even, but margins remain strong. Tier 1 strategic asset accumulation on pullbacks is reasonable for medium to long-term investors. Tech sector, AI momentum reignited. Tech stocks also surged, recovering much of last Friday's losses. Two key catalysts. 1. Trade tensions eased. Semiconductors like NVIDIA, advanced micro devices, and Micron technology rebounded sharply as investors' concerns about Chinese supply chains eased. 2. Broadcom and OpenAI partnership. Broadcom announced a multi-year strategic collaboration with OpenAI. Broadcom announced a multi-year strategic collaboration with OpenAI to co-develop and deploy 10 gigawatt scale custom AI accelerators and networking systems. This is one of OpenAI's largest chip supply agreements after its partnerships with NVIDIA and AMD. Broadcom stock jumped nearly plus 10%, adding tens of billions in market cap, reinforcing its role as a leader in AI and enterprise-class semiconductors. Broadcom remains fundamentally strong and a core long-term AI infrastructure play. Suggested strategy? Start light, add gradually after a 3% to 5% pullback. The deal also reignited optimism over the AI supercycle, driving the Philadelphia Semiconductor Index up plus 4.74%. For now, notable tech movers. NVIDIA up 2.82% AI chip rebound. Oracle up 5.2% strong buying ahead of its annual conference. Tesla up 5.4% rebound from recent correction. Advanced micro devices up 4.2% AI infrastructure demand. Micron technology up 6.15% memory upcycle optimism. Applied materials up 4.54%. Alphabet up 3.01% boosted by a major legal win and sustained AI divided by cloud growth. Broader market small caps joined the rally. Beyond tech and materials, the Russell 2000 rose plus 2.75%, showing that risk appetite is returning as fears over trade and macro uncertainty ease. Clean energy spotlight, Bloom Energy. Bloom Energy designs and manufactures solid oxide fuel cell systems and electrolyzers for clean, distributed power. Market cap is approximately equal to $2.6 B to $3 B. Revenue growth 15% to 25%. CAGR over the past 3 years. Still unprofitable, but now gaining traction with major partnerships. Announced a $5 B strategic AI infrastructure partnership with Brookfield to supply low-carbon 24x7 power to AI data centers and enterprise campuses. Stock soared 26.5% today. Entry guidance. Wait for pullback to $105, $108 to start small. Accumulate around $105 with medium-term target $125, $135. Long-term upside, $150 if cash flow turns positive. 7 power integrations. A high-performance power semiconductor leader based in San Jose. Serves AC to DC conversion, energy efficiency, fast charging, and industrial power markets. Market cap is approximately equal to $4.8 B to $5 B. Gross margin is greater than 50%. Net margin is approximately equal to 20%. No long-term debt, strong cash position. Partnered with NVIDIA to bring its new 1,250 volts and 1,700 volts technology into next-generation AI data center power platforms. Medium-term bullish, accumulate on pullbacks. 8-10 gold safe haven surge. Gold continued to soar to record highs, reflecting lingering market uncertainty, driven by renewed trade tensions, Fed rate cut expectations, and central bank accumulation. China, India, Turkey. Weakening real yields and a soft dollar made gold's zero-yield appeal stronger again. Short-term, overbought. Near-term pullback possible. Wynn Resorts. WYNN Resorts, a leading global luxury gaming and resort operator, fell over 6% today after Macau's gaming revenue report came in weaker than expected. Investors worried that slower VIP recovery could pressure Q4 earnings. Short-term sentiment cautious, though long-term fundamentals remain intact. 10 final thoughts. Overall, today's rebound shows remarkable market resilience, but high valuations and trade uncertainties still warrant caution. With major earnings season, banks, big tech, etc., kicking off this week, volatility could rise sharply. Stay nimble and manage risk carefully. Thanks for watching. If you find this video helpful, please like, subscribe, and share. See you next time on US Stock GPS.